So, you've decided to jump into the world of Airbnb hosting. Good on ya, that is fantastic. It's an absolutely brilliant way to make a bit of extra cash and, meet some interesting people along the way. But with that awesome new income comes a few new responsibilities, and that's exactly what we're going to break down today.
See, the thing is, while you're busy being a great host, the Australian Taxation Office, the ATO, they're taking notice too. So the big question really is, are you ready for what comes at tax time? Don't stress. It's not nearly as scary as it sounds, and I promise, getting it right from day one is going to save you a world of headaches later on.
Okay, let's be blunt. This isn't a case of hope they don't notice, because they will. The ATO has this really clever data matching program, which means platforms like Airbnb are required to report your earnings directly to them. So yeah, not declaring what you earn isn't really an option. But the good news, being prepared is your absolute best strategy.
Right then, let's dive into the fundamentals. How does the ATO actually look at your new hosting business? Getting your head around this relationship is the first, most crucial step to staying on the right side of the taxman and, more importantly, making the most of your money.
Okay, the first bit of lingo you've got to learn is assessable income. And honestly, it's pretty simple. Every single dollar you get from your Airbnb rental is seen by the ATO as income. And that means you have to declare it. It doesn't matter if it's a spare room for a few weekends a year or a whole holiday house. It all counts.
Now, when we talk about income, it's not just the nightly rate you're charging your guests. To get your tax return right, we need to be crystal clear on what the ATO counts as part of your total income. And believe me, it's usually a bit more than most new hosts think.
Yeah, it's super easy to just think about the main rental payment, right? But the ATO looks at the whole picture. You've also got to include any cleaning fees you charge, extra fees for things like pets, any bond money you had to keep, and even insurance payouts related to the property. It all gets added together to become your total assessable income. Okay, enough about what you have to pay them. Let's get to the good stuff, the fun part, deductions. This is how you legally lower your taxable income and make sure you're not paying a cent more than you have to. And the ATO lets you claim a whole range of expenses. So, the first thing to wrap your head around is that there are two main buckets for your expenses. You've got direct expenses. These are things only for your guests, like the Airbnb service fee. You can claim 100% of those. Then you've got shared expenses, which are for the whole property, like your internet bill. You can only claim a portion of these, and we'll get to how you figure that out in just a sec. And just have a look at this list. There's a whole bunch of stuff you can claim. I mean, beyond the obvious ones like Airbnb's fees and your mortgage interest, you've got your council and water rates, insurance, utilities, even the little things like guest toiletries and coffee or getting professional photos done for your listing. Trust me, it all adds up.
Now listen up, because this is a biggie that so many hosts miss out on, depreciation. Basically, you get to claim the wear and tear on your assets over time. We're talking furniture, appliances, and even the construction costs of the building itself, which is called capital works. It's worth getting a quantity surveyor to do a report on this. It can literally save you thousands.
All right, let's take a deep breath and tackle what is, honestly, the most confusing part for almost every new host, apportionment. But stick with me here, because getting this calculation right is absolutely critical, especially if you're just renting out a part of your own home.
So, what on earth is it? Well, think of it this way. Apportionment is just the fancy word for splitting your bills fairly. If you have an electricity bill for the whole house, you can't claim all of it, right? You can only claim the percentage that actually relates to your Airbnb guests using the place. Luckily, the ATO gives us a couple of clear ways to figure this out. The first one is by floor area. You literally work out what percentage of your home's floor space is for the guest and what's shared. The second one is by time. So what percentage of the year was the room actually available for rent? And most of the time, you'll end up combining both methods. Let's make this real. Have a look at Laura's situation here. She rents out a spare room. By crunching the numbers on both the floor area and the number of days it was rented, she figured out that 6.85% of her shared expenses were claimable. So for her $10,000 mortgage interest bill, she could claim a $685 deduction. See? It makes a real difference.
Okay, now we get to what is, and I'm not exaggerating here, the absolute golden rule of being an Airbnb host. If you want to claim all these fantastic deductions and keep the ATO happy, your record keeping has to be bulletproof.
It's simple. You need to live by this mantra. If you're standing in the supermarket wondering if you can claim that extra toilet paper for the guest bathroom, track it. If you paid a cleaner, track it. Every single little expense needs a record. Think of it as your evidence. So what does that actually look like? Well, you need all your income statements from Airbnb, a receipt for every single expense, and, this is important, a calendar or logbook that clearly shows when the property was rented versus when it was for your own use. And the kicker at the bottom, you have to keep all of this for at least 5 years. Yes, 5.
Right, we've covered the ins and outs of your yearly tax. But there's one more massive topic we have to talk about. And this one is all about planning for the future. Capital gains tax, or CGT. That's the tax you pay when you sell an asset, like your house.
Now, this is the one that really catches people out. Normally, when you sell your main home, the one you live in, it's completely tax-free from CGT. It's a great perk. But the moment you start using that home to make an income, well, things can change. What this all means is that by earning money from your home through Airbnb, you might have to pay capital gains tax on a portion of the profit when you eventually sell. The ATO will look at the floor area you used and for how long you rented it out to figure out the taxable bit. If you're not ready for it, it can be a really nasty surprise down the track.
But, and this is a big but, you can absolutely prepare for this, and the plan is dead simple. There are 3 steps. Step 1, the very day you first list your property on Airbnb, get a professional valuation done. Step 2, keep that report somewhere super safe. Step 3, when you eventually sell, give that report to your accountant. Seriously, this one simple action could save you an enormous amount of tax.
So, after all that information, if you're thinking, what's the one thing I should do right now? It's this. Go and open a separate bank account just for your Airbnb. Have all your income go in there and all your expenses come out of there. It makes tracking everything a breeze and will make your life and your accountant's life so much easier.
And there you have it. You're now totally armed with the essentials to handle your Airbnb taxes with confidence. You get the deal with income, you know what deductions to look for, and you know how to plan for the long game. So, I'll leave you with this question. What's the very first expense you're going to go and log for your new venture?